Welcome to a brand new video and a brand new series on a brand new channel. You are here, you're witnessing it, and we are on the Market Disruptors channel. Now, you've probably heard me throwing that name around for a long time. As a matter of fact, my original YouTube channel was called Market Disruptors before I changed the name to my own, Mark Moss. Now, Market Disruptors are you and I. We are the ones going out into the market, disrupting the way things are. And we're doing that with technology. We're doing that with education. Now, the system's captured. The system's corrupted. The system, in my opinion, is beyond repair. I know I've seen in the comments a lot of times on my other channel that I should go into politics. You wish I was the president. I would never want to go into politics. And even if I did, dedicate my entire life to changing, to fixing the system, I just don't think it's possible. So rather than focusing on that, rather than focusing on all the bad, all the negativity, rather than focusing energy on trying to save something that can't be saved, we're over here building an alternative system, an alternative money system, leading to an alternative education system, alternative health system, and everything. We are disrupting markets. That's what the market disruptors are, and that's why you're on this channel, because you are joining us. My job isn't to wake up the sheep. My job is to wake up the sleeping lions, and hopefully that's you, a sleeping lion. So today, what we're doing on this video series is I am trying to give you more information to wake you up. You're the sleeping lion. And so I'm taking questions that you've asked on my other videos. I present a lot of information, education, and you have questions about it. I'm taking those questions. I'm going to answer them for you on these videos every single week. And if I pick your question to be answered on this video, I'm going to send you $25 in Bitcoin just for posing the question. It's my way to give back. It's my way to entice you guys to dig deeper into your own education and really learn how to disrupt markets. Now, I am with my guest host, Matt, and Matt helps me a lot on the production side. And so he's going to help me go through these questions. We're going to dig in deep. We're going to give you the information we have. So Matt, welcome, and let's go. What do we got?
Yeah, so from your video last week that we're going to plug up right here, I cherry picked some of the best questions for you to answer that intrigued my interest as well. Now, before jumping into that, I would like for people to comment below and make sure that you got to watch the video and see if it was your question that got answered. And I'm going to go ahead and reach out and contact you so Mark Moss can give you your gift for leaving a good question that got featured on today's episode.
Yeah, that's a great point. That's a great point, Matt. So as I said, right, if you leave a question on my other channel and any of the videos, we're going to grab each week, we're going to grab some of the questions and make a video about them here. But you got to come watch them here. You're already here watching them, but you have to come watch them here. You have to leave in the comments, say, hey, that was my question. And then we'll contact you and we'll get your information. So anyway, go ahead, Matt.
So the first question was from, don't laugh at the name, it's a clever name, Three Little Piggies and Bad Wolf.
Okay.
Your question was, why does Bitcoin look like it's following the stock market at times? Which was something that I believe was a very good question, because a year back or two, I saw the stock market and the cryptocurrency market moving in unison. But it also was kind of in direct correlation with the stimulus care packages and stuff like that. But I would love to hear your thoughts on that question particularly.
Yeah, sure. Well, we can talk about it on a high level. I'd love to pull up some charts and show you. But basically what you're talking about is a correlated asset. And so as an investor, you're trying to diversify or allocate your funds into non-correlated assets. So that way, if one goes up, the other one may be going down. When this one goes up, the other one goes down. And so you're hedging your risk. You're managing your risk by doing that. And so Bitcoin has become very, very popular on Wall Street lately over the last year or two because of that non-correlated asset category. And so hedge funds, institutions are putting 1%, 2%, 3%, 5% in, so that as the market gets this volatility, Bitcoin goes up and offsets that. So the question that's being asked is, it seems like Bitcoin and the stock market are moving together as opposed to most people thought they'd be moving opposite. So let me answer that as best as I can without having all the data to back it up. So there's a difference between correlation and causation. So correlation means two things are happening at the same time. Causation means that one is moving because of a certain cause. So for example, it's summertime, it's hot, people eat a bunch of ice cream in the sun. Well, they also go to the beach a lot, and there might be more shark attacks. So you could say, well, when people eat more ice cream, there's more shark attacks. because those two data points are correlated. But the ice cream wasn't the cause of the shark attack. So you have to be careful when you're doing analysis for that. Now, digging into this question specifically, another thing is that even though sometimes if you were to overlay the chart, it looks like they're moving sort of the same, the size of the moves are different. And so that also changes the risk return profiles. But what I would say is that as Bitcoin continues to mature, continues to grow, develop, we're seeing it become more and more non-correlated from the market. So we're starting to see that separation more and more and more. That being said, what we're seeing right now is an unprecedented money printing, right? Like we've never seen. I think I did a video last night. I think I totaled up like $9 trillion almost that they've spent. They're already talking about another 4 trillion. And so that creates an environment where people know the dollar is a melting ice cube. It's becoming worthless. And they're scrambling to put that money anywhere that it could maintain its purchasing power. And so, of course, that's going into stocks. Of course, that's going into Bitcoin. So, of course, those assets are all going to be correlated because people are scrambling to get their money out of the bank into any kind of asset that they can. Likewise, when the market downturns, like we saw in March of 2020, people scramble for liquidity. All right. So they have to cover their margins or whatever. So they'll sell any asset that they can. A good example of this would be back in 2008 when the market crashed. The stock market dropped about 50 to 60%. Gold, they sold gold for liquidity. It dropped about 25%. So they moved at the same time. So they look correlated, but one dropped 60, one dropped 25. The difference was the cause. So as the Fed pumped money in to push the stock market back up, what it really did is push gold back up. And so gold recovered its all-time high, its previous all-time high in about 6 or 7 months. Stocks took about 6 or 7 years. And so the reasons, the cause of those movements was different. So that's why gold was a good hedge. Although it did sell off at the same time, it sold off only a little bit. It rebounded quickly. And then, of course, it went way past its all-time high. And so that is an example. And that's what I expect from Bitcoin. Maybe it looks like it's moving in unison. The cause is different. And I expect it to move different when the time comes.
Wow, that was an excellent answer. You answered my question because that was one that has puzzled my mind for quite some time. But moving right along into the next question,
All right.
Rich 88. He says, Mark, love your videos. Question, what's your thoughts on the big melt up that's coming? And I'm assuming he's speaking on Mike Maloney speaks a lot about this melt up on how all assets are actually going to melt to the upside, leaving the little guys behind. What's your thoughts on that one?
Yeah, well, the melt up is something that a lot of people talk about. I talk about it a lot as well. I talk about it, I call it something like the blow off top. And so first off, market cycles are always kind of the same. And so if you've seen, maybe we can put it up on the chart, the editor can get the Wall Street psychology, and it shows kind of this repeating cycle where like you don't believe it, and then there's disbelief, and then there's euphoria, and then it crashes, and you go through this whole psychology. And so markets, as they start heating up, it starts sucking in more buyers. And so what happens is two things. First of all, as humans, we're very basic creatures. We're motivated by pleasure and pain. That's it, 2 triggers. And so as the prices are going up, we want that pleasure, and so we rush into it. Oh my gosh, I just turned 1,000 into 5,000, and then more people get sucked in, and as it sucks in more people, it goes up even faster. And then, which then pushes it up even faster, which then it sucks even more and it pushes up. And it's like this self-fulfilling prophecy. And so you start getting this melt up. It's a parabolic run, right? It just turns up and runs vertical. And then, but the problem is all those people that came in at the top, they came in looking to get rich. They came in looking to turn 100 into 5,000 in a week. And as soon as it turns down a little bit, we call them the weak hands, they just sell. Right? And so we get this extreme volatility at the top. Now, that is a normal market cycle. Now, in regards to the melt up specifically, we have another thing that's adding to that. It's gas on the fire. And that is what I just talked about in the last question, which of course is the $8 or $9 trillion that the Fed has just pumped in. And so already at the end of bull market cycles, we get that melt up, but we are getting melt up at an unprecedented level because of that money printing. And everybody knows those dollars are losing purchasing power left and right. They're trying to get out of those dollars as fast as they possibly can. Let me give you an example. So the Fed says they're targeting 2% inflation. Everybody knows it's higher than that. Gas is up 30% this year. Home prices are up 15 to 20% in a year. Not just home prices. I like to develop real estate. The cost of lumber and concrete is up 30 to 50%. So I'm developing real estate and I'm like, shoot, man, if I don't pull the trigger and get this project built right now, in 6 months from now, my cost is going to go way up. I have to spend the money right now. And so it's forcing people to push money into real estate, push money into stocks, push money into Bitcoin everywhere because of this inflation, this $8-9 trillion has been printed. So you take a normal market cycle, you throw on the gasoline, the jet fuel that the Fed has created, and all these assets just start melting up. And that's what they're referring to. It's real, and it's happening right now.
I would assume that's going to cause a humongous wealth inequality gap because the people that are in are obviously going to sail the boat far away from the land and leave a lot of people behind.
Well, the problem is, I mean, as far as the wealth inequality, is that the people that own assets benefit because all the assets are going up, so they're maintaining their purchasing power. The people who don't own any assets, they lose because all they do is depend on their pay, on their wages, and those wages continue to buy less and less and less. So they're falling further and further behind, while anybody who owns assets, and so we can say the rich, but anybody that owns any assets, stocks, real estate, gold, Bitcoin, etc., will at least be able to maintain benefit from that. And so really that dividing gap, the rich and the poor line, is, do you own assets? And so you're watching these videos, I'm assuming you do. And if you don't, then you really need to think about getting that melting ice cube of money and put it into some assets to keep up with the inflation.
Yeah. In layman's terms, you want to be part of the melt up on the
Yeah,
right side.
you want to participate, right? You're either in it participating or you're on the sidelines getting left behind. I mean, those are your two options.
Yeah. All right. Awesome. So moving right along, we got another question from Stefan. I hope I don't mess up the last name. Kovaka. So question, what do you think of Saylor's opinion that Bitcoin will eat gold and destroy its value as a non-dollar asset? I see gold surrounded by Bitcoin, no one side, and by the Crimex futures price controls on the other. Should we be rolling out of gold into Bitcoin? And if so, to what extent?
Yeah, so I mean, this is a debate that will rage on, and only time will tell the true answer. I would say that there's pros and cons to both assets, and it's not always about picking the one single thing and being lucky. It's about diversifying your bets. So let's talk about that. So there's pros and cons to both gold and Bitcoin. Gold obviously has history on its side. It's been money for 5,000 years, and people really hang on to that. However, people walked for 5,000 years too, and then there was a car, right? People used fire for light for 5,000 years, and then we had electricity. So just because something's been around for 5,000 years doesn't mean it's superior, doesn't mean it'll be replaced. That being said, gold kind of, it's what is a strong point isn't necessarily if you look at it in the right way. The other thing the other problem with gold is that we got electricity, we got the internet, and we live in the digital age. Right now, Matt and I are in different parts of the world, and yet here we are on video. We have a global economy, we have global commerce, and Matt and I are able to stream and do videos together right now, but how could I pay you in gold right now? It wouldn't work, right? So gold hasn't kept up with technology. That's a problem. The other thing with gold is that it requires centralization. It's very heavy. So it goes into the bank, and that centralization, as I always like to quote, centralization always leads to manipulation. And so when the banks have all your gold, then they're going to manipulate it, right? And that's what happened when they made gold illegal in 1933. It wasn't because they were afraid of a competing money supply. It was because the banks were bailing themselves out, and they just took the gold that was already in their safes. So that being said, Bitcoin has a lot of advantages over gold, but I don't think it's just as easy as what Michael Saylor says. I think it's something that probably happens over generations. Obviously, we have different generations. So for example, maybe my grandparents would probably never buy Bitcoin, but my kids would probably never own gold, except for my gold I passed down to them. And so it's this thing that happens over generations. But at the end of the day, I believe that Bitcoin is a superior asset. I believe they're going to move differently. I think you probably want to own some of both. And depending on where your convictions lie on either side of the line, it's going to determine what your allocations are to each.
I like that. I like that. One thing that I would highlight there, what you said, is how times are always changing. We had fire and then we had electricity. And I couldn't agree with you more. We're moving out of a cash society into a cashless society. We're losing a lot of the physical things, such as gold. Even though it's still around, even though it has a larger market cap, it's still losing its use case in this new digital realm that we move into. So
Yeah.
I do like that you highlighted that, and it was answered very well.
Yeah, and I
Now,
think people just expect too much too soon. Like human nature, I think it was Bill Gates who I'm not his biggest fan, but I think he said that humans overestimate what they can do in a short amount of time, but underestimate what can be done in a long period of time. And so what this means is that we get very impatient. We expect all these things to happen right away, and when they don't, then we think it doesn't work, but we don't realize that it just takes time. So, for example, the internet. Now, I was investing in the early stages, late 90s of the dot-com boom. And at the late 90s, 98, 99, we had webvan.com that was going to deliver groceries to you. And we had pets.com was the famous one. You could buy your pets products online. The problem was they went bankrupt. It was a disaster. It dragged the whole industry down. The problem was they were right, but they were too early. And being early is the same as being wrong. And so people just didn't realize that it was going to take another 10 or 15 years until vans were actually delivering groceries like they do today, right? People today, groceries are delivered. People buy their pet stuff online. It was just too early. They were 15 years too early. And I think that's the same thing where people start going, well, shoot, Bitcoin should overtake gold and it should happen by tomorrow. Like everyone's going to get out. And it's like, no, it doesn't work like that. You can look at the adoption of any kind of technology, whether that's the electricity, whether that's the telephone, whether that's the personal computers, the internet. And so you can look at these technology adoption patterns, and it just takes time. And each one happens faster and faster. But I think people just need to kind of check themselves, realize it takes time, realize it's happening, and just be patient and wait for it.
yeah, key point there is realize that it's happening. A lot of times you're in the middle of something, you don't even realize you're in the middle of it. Like everything that's going on with inflation and everything with the demise of the debasement of our currency, etc. But I can go on a whole tangent on that.
Sticking with that theme, right? I mean, obviously, people we're talking about gold, and so then thinking about money and currency and whatnot. And so I talk a lot about the dollar, the currency collapse, things like this. And everyone's like, when is it going to happen? When is it going to happen? It's like, well, it's happening right now. Like we're in the middle of it. Like we're witnessing it happening in real time. So it's not like a light switch all of a sudden it happens. When the last time we had a reserve currency change was the dollar took over from the British pound. And it was about a 40-year process. There was finally a kind of a deciding moment, but it took about 40 years for that to happen. So people ask, when is this going to happen? It's like, we're watching it. We're living through it. I've gone on to say many times that I believe history books will be written about this period in time right now. I believe the headline is going to be a quote saying, "What the heck were they thinking?"
That's true. All right, so moving right along into the next question. This question is from Ja.
Okay.
Their question is, a lot of people say physical silver will skyrocket once JP Morgan can no longer manipulate it. When and how is this ever going to be the case? Thanks. So, from my knowledge, I believe everyone with the notion was JP Morgan has X amount of shorts on the futures market, suppressing the prices of silver in particular. So I'm assuming they're referring to that. I don't know. What's your take on it?
Well, JP Morgan has cornered the silver market. They've done a 51% attack, right? They've taken over half of the physical silver and controlled that. And so by controlling that amount of silver, they're able to then manipulate the price. Of course, I think they paid out the largest lawsuit in history for being accused of doing that, or being found guilty of doing that. So that's definitely been happening. Gold and silver are both captured and they're both controlled. There's really an unknown amount. Estimates are somewhere about 500 paper ounces of gold, like that's fake paper ounces, for every one real physical ounce. So like 500 to 1. But I've heard reports that it's maybe a 50,000 to 1. So we don't know how many digital paper ounces there are. So that is one way it's used to manipulate it. So the JP Morgan or any of these banks, they can spoof, they can pretend like they're trading large amounts, naked shorts, they're calling them. So they're selling and buying and selling stuff in large quantities that they don't have, just to manipulate the price. That's one way it's done. But also the problem with gold is that the price of gold is set every morning by a couple of guys in a room in London, not in a free open market. Not like stocks where the bid, the buy, and the sell is always, or Bitcoin where the buy and sell is going like this. No, somebody sets the price of gold every day, and so that's obviously pretty manipulated. To Ja's question, when will this end? I mean, who knows? Who knows when it will end? And that's part of the problem, right? We don't know. At some point, we need something to happen. And so a couple catalysts could be: one, we're having massive shortages on physical silver and gold. And so that could cause the price to break when we finally really hit massive shortages, and we're getting there. We're close to that. So that could be one catalyst. That's probably the most probable catalyst that I would expect to see. All these future contracts, instead of getting paid in cash, they could demand to take the physical. That would really accelerate that. Another thing is, I've seen that the London Bullion Bank, they, like I said, they kind of have that monopoly on the price setting. And there's other bullion associations that are trying to set up competing operations, and that competition could break that monopoly as well. Other wild cards, the government could decide to revalue the currency against gold. There could be things like that as well. So we don't know if or when, but that's kind of what we'd be looking at.
Yeah, it kind of reminds me of back then when they had the bank run. This whole thing, how you said they were manipulating the prices where they get more contracts than actual silver. It's just like the fractional reserve system where they're able to have more certificates but less gold, and then eventually no gold, and now we're here.
Yeah, I mean, it's a ridiculous system, and I think if people knew about it, they'd be outraged. I don't know what that would mean. 100 years ago, Henry Ford said, if the people knew how the banking system worked, there'd be a revolution before morning. And that was 100 years ago. Imagine how much more manipulative it is today. But the very fact that these banks and these funds can manipulate the price by selling things they don't have is, I mean, I just don't see how anybody could think that's okay, and how anybody's okay with that. They shouldn't be allowed to do it, and maybe at some point it'll change.
Yeah. All right. So next question that I had lined up for us is from Daniel. Another Bitcoin question. This is one that I had to bite my tongue on because I would have loved to answer it here in the comments, but I saved it for this video.
Daniel, is it just Daniel or Daniel who?
Yeah, just Daniel.
Okay.
Yep. So question: if BTC miners profit by their activities, which are updating the ledger, what happens when all the coins have been distributed? How will the ledger update if there's no financial incentive to mine?
Well, they answered their question with the question, right? So Bitcoin miners, for everybody who's not up to speed, Bitcoin is a network, and so it's a computer network, and so the miners are computers that hooked into the network, and they help process transactions. Currently, Bitcoin miners earn rewards, earn money two ways. First, as they're processing transactions, new coins are created, and they get a percentage of the new coins every single day. Every single day, new coins are created, and every 4 years, there's a halving. So the amount of coins created every single day cuts in half every 4 years. So that's one way they get paid. The other way they get paid is by, per their question, processing transactions. So what they're referring to is that in about 130 years, in 100 years, let's call it, the amount of new coins created will be very small. And so at that point, the majority of the revenue may not come from new coins, but it might come from processing transactions. So again, they answered their question with the question. Now, some people think this is a problem. Well, if miners aren't getting new coins, then why would they continue to mine on, help process the transactions? That's the question. But the answer is, Because they're getting the payments for processing the transactions.
And that's
And
why.
so they get paid both ways. Obviously, we can speculate, we could debate about the future and whether, in 130 years, if that's going to be sufficient. Most people who have studied this at length, including myself, believe it will be. The thing is that the price of Bitcoin, if it continues to go up like we believe it will, even though the amount of new Bitcoins being released each day goes down, the US dollar value of those coins keeps going up. So they have to pay for their electricity on a dollar basis, and their dollar amount keeps going up. And so it works that way. But then at some point when the network's big enough, potentially in 100 years, $100 trillion, whatever, there's going to be a lot of transactions. They're going to make a lot of money on those fees.
Yep. Yep. So moving right along to the last question that I gathered for us here today. This one is by Pip Puppy.
All right, Pip Puppy.
So how does crypto work when the lights go out? It's a great target for basement dwellers to hack. I feel it's a diversion, so prefer precious metals and other real stuff. I always said if the lights went out, you have a bigger problem than getting your Bitcoin, first of all.
Yeah, definitely. Yeah, well, I would agree exactly what you said, right? If the lights go out, we have much bigger problems. But you also have to remember that the US dollar, about 90% of transactions are done digitally. So basically, the whole world would shut down, right? No Visa, no credit card, no ATMs.
Yep.
Stores wouldn't be able to open. I mean, we'd be living in this Mad Max scenario. Now, if you have this vision that the entire world goes dark at the exact same time, and electricity never comes back, I mean, that's one worldview. I'd love to hear how you came to that conclusion. I think anything is possible. Aliens could come back and destroy the world tomorrow. That's possible. The probability of that is so extremely low. It doesn't bother. I don't bother to think about that. And I would also say that the probability of the entire world losing electricity and never getting it back is also so low that I don't waste any time thinking about it. So is it possible for a city to go out of power for a day or a couple of days even? I mean, we've seen it happen with hurricanes and storms. I mean, sure, that's possible. But as I said, right, the dollar transactions, 90% are digital anyway. So that whole system gets messed up. So, that is more probable. So if you live in an area, you're concerned that you could lose power for a couple of days, what would you do with your Bitcoin? Keep some cash in your safe, keep some silver coins in your safe, right? That Mad Max end of world scenario, you have some of those coins. But just even if the entire globe went dark, the whole power went out to the entire world, let's say for a couple of days, a week, a month, whatever. The Bitcoin ledger doesn't get wiped out. It's still there. And as soon as the power comes back on, you can access the network again, just like you would with your bank, right? You couldn't get your money out of the bank, but it's still there, hopefully. And then when the power comes back on, you can get your money out. So it's no different than any of your other digital assets, your stocks, the money in the bank, et cetera. Plan, if you're really concerned about losing your power for days or weeks, then you have that prepper mindset, make sure you're stockpiling food, water, some things to barter, things like that. And if that's your worldview, then just plan accordingly. I just don't imagine a world that doesn't have electricity.
Yeah, likewise.
Yeah.